definitely some things we should look at insurance-wise as you come into the end of the year and roll into the beginning of a new year. You should always be on the nice list. So we're going to see if you're naughty or nice with your policy. And let's see, does your policy still fit? So your life changes. Your coverage must too. You got to make sure that as life changes, that you're looking at your coverage, because a lot of people don't take the time to review their coverages, all of their coverages. So don't let your financial plan fall into the naughty column this Christmas, but definitely make sure that you are in the nice column with a policy review, and get your policy reviewed toward the end of this year, which still have a couple of weeks left, or jumping into the beginning of the new year. Definitely get your policy reviewed. So the critical check-in. Why 12 months is the magic number? 12 months is the magic number because it's a good time to continue to evaluate your policies and make sure everything is on point. So here's some key points to look at. Life is constantly changing, accelerating. Marriages, new jobs, new homes, all these things happen fast. So a lot of times things are happening so fast that people don't make adjustments. An updated policy means, an outdated policy means you are insuring yesterday's life, not today's reality. And we need to make sure that the reality that we're living in, that we have it protected. The goal is to ensure your policy limits and beneficiaries align with your current financial obligations and assets. So it is important to make sure that you are looking at your policy limits as life changes. The risk is that underinsurance leaves you personally liable for major events. So if you're underinsured, a lot of things can happen. And if you don't have enough protection or enough coverage in different areas, then it's going to come out of your pocket. So it is best to review, make sure that you are updating as life events happen. So we're going to look at a couple of major events major changes that can happen in your life over a 12-month period. So major change number one is housing and assets. And have you updated your home or your assets? And this is homeowners and property insurance primarily. And when you're looking at it, did you buy a new home? And if so, you need to update your replacement cost or replacement cost value. Or did you complete a major renovation? Then you need to increase your dwelling value for your house. And I hit this twice and I didn't get to change it. So same thing. And then you increase your dwelling coverage limits to meet your current replacement costs. So it's important that you do this. Most people, I will say, kind of take care of this, because when you buy a new home, especially during the course of the year, you buy a new home, then as you get a new policy for that home, you kind of make sure you're covering. Typically, you cover the limits if you have a good agent, or if you're astute on what you're doing with your homeowner's insurance. And then, of course, most people miss it on the second one, which is major renovations. They don't increase their dwelling value, and then they end up underinsured sometimes. So these are one of the major changes that you need to look at and make sure that you are covering that property insurance area. Major change number two is family dynamics. Of course, time can cause family dynamics to change. You can get married, you can have children, or you can even unfortunately get divorced. So you have to look at your life insurance and estate plan area. So here's the couple of major life events. Marriage. If you get married, then you need to look at the combined debts and combine both of your all's debts together. Typically, you should do that. You have a lot of independent households now where people still married and keep their bills and stuff separate. But I encourage you to look at the combined debts that you have. And then one of the big things that a lot of people don't do, review the life insurance needs for both of you guys. For as you guys come together and marry and become one, you should review the life insurance needs for both of you all. And if you have children, as you bring two households together, you need to see what limits and everything you need to increase. If you have a new child, then you need to look at increasing life insurance benefits for income replacement, as well as looking at education funding. So you need to look at that and definitely put something in place to increase your protection as you have maybe a new child or another new child, an additional child to the family, so that you can have enough to leave an inheritance for your children, as well as provide for the child's education. And then, of course, unfortunately, if divorce happens, um, you should immediately, what's that word right there? Immediately update beneficiaries and policy
Immediately.
ownership. And one of the things that a lot of times happens with divorce, um, a lot of people are not immediately updating beneficiaries and policy ownership because of the emotional strain that divorce may cause sometimes. This is something that normally happens on the back burner for people, and some people even miss it before something catastrophic happens. And because the divorce was already devastating, and then anything else that happens, they may not have unfortunately changed the beneficiary or the policy ownership. So that is a key thing to keep in mind and keep on the forefront when you have a major change like divorce. So the key thing to remember is that new dependence means that a critical need for higher income replacement coverage is necessary. So you have to make sure that as things change and you have a change in family dynamics, that you are making sure your coverage is up to date for the family situation. Major change number three, career and income. Did your income change significantly? If so, you have to look at your disability coverage and your life insurance coverage. And here's some points to consider. If your salary increases, your standard of living will typically be higher, and you need to get some more life insurance to protect it. You need because you need to make sure that you have enough for income replacement and to have your family's needs still taken care of if God forbid something were to happen to you. And then if you get a new job, thing to ask yourself is do the company provide disability and life benefits that fully meet your needs, or do you need to supplement? In most cases, I call everything on the job bonus. So you need to definitely have outside policies in this area because at any day, just like you got a new job, you can lose that job, and you don't want your protection to be totally tied into the job to where you don't have it if anything happens or you change jobs. So when you get a new job, definitely explore the company provided disability and life benefits, and then still add with your outside protection to make sure that you are covered and meeting your needs for your family. And then self-employed. If you become self-employed and you promote yourself to self-employment or to entrepreneurship, your biggest asset is your ability to earn. And you have to review your private disability income policy limits as well as your life insurance limits and protection, because you are your biggest asset. So you need to protect it and make sure that you are protected first and foremost. So major changes as far as career and income are typically significant, very important, and you need to make sure that you are plugged in and checking on that coverage to make sure that you and your family are protected. So the growing need for liability protection. Your assets grow or grew. And so here's the question. So did your risk, or here's the statement. So did your risk. Your risk grew because your assets grew. So as you accumulate assets, in other words, home equity, savings, things like that, you become a bigger asset for lawsuits and you need to protect it. And the personal umbrella protection is something you can get to cover you and your assets so that you don't lose your assets. So, what it covers, it extends the liability limits on your home and auto policies, typically offering $1 million to $5 million in coverage. And that will put you in a situation where you should be protected liability wise if anything were to happen. So it extends your liability limits on your home and auto policies, typically offering $1 million to $5 million in coverage. And you protects you so that you don't put yourself at risk and have this personal umbrella policy covering all your assets because you want to protect your assets. So the most forgotten step is beneficiaries. So the key thing is to stop and remember who gets the money if something were to happen, and the beneficiary gets the money. So after a major life change, like a second marriage, divorce, or uh, sometimes when your children get older and become adults, an outdated beneficiary designation can override your will. So you have to make sure that you have updated your beneficiaries. I said it earlier. One of the biggest and most forgotten is beneficiaries when you typically get a divorce. And then some people don't ever realize it and pass away and they never changed their beneficiary, even though they were divorced and that was not their intention to continue leaving that person as the beneficiary. So the critical checklist is you check your life insurance policies, make sure you update your beneficiaries and change your beneficiaries as needed. Then look at your 401ks and your IRAs. Make sure you look at those beneficiaries. And if you need to change them and update them, do that there. Annuities, make sure your beneficiaries are up to date and on point to who you would like the beneficiary to be. Your beneficiary determines who receives the proceeds, not your last will and testament. So review them annually. Annually, you should review them annually because as things change, you should definitely want to change your beneficiary if needed and be on point and on target with taking care of that. Because remember, this is the most forgotten step in reviewing your policies and keeping your policies up to date. That will definitely put you on the naughty list. Auto coverage. Are you insured correctly? So driving changes, auto policy updates. You should always look and review your policy. After a major life change, like a second marriage or a divorce or something like that, an outdated beneficiary designation can override your will. It's the same thing with your auto policy. Um, did you buy a new or luxury vehicle? You need higher comprehensive and collision coverage. Are you commuting more and moving, going back and forth more, traveling more? You need to review your mileage classification for potential savings. A lot of people miss this one and they don't review any mileage classifications and see if they can get discounts. And a lot of times your agent doesn't even call you and check on you and give a review or an update. And then, are you using your vehicle for business? Big one in today's era. Uh, a lot of people are doing ride share and they jump into it. And if the company doesn't require you to check, they don't even see if their policy will cover them for commercial use. And they jump into Uber and Lyft and things like that, or DoorDash, and end up not being protected for commercial use. So you have to make sure that your current policy will cover you for commercial use when you are out there doing using your vehicle as a commercial vehicle. So reassess your liability and uninsured or underinsured motorist coverage to make sure you are protected. Calculating the cost of delay. The naughty column, the risk of underinsurance. So here's an example to bookmark. Imagine a house fire. Your policy only covers the 200,000 appraised value from 5 years ago, but reconstruction now costs 350,000. So the $150,000 difference comes out of your pocket. So you lose because you did not really look at your policy and reevaluate it and see if you needed to get more protection. And that's a high cost to pay for not doing your homework and waiting to make an adjustment. So small savings on premiums often lead to massive financial loss during a claim. And that happens to a lot of people because they just say, man, they don't want to pay the additional $50 to $100 or whatever increase in premium. And then because nothing's going to happen, nothing happened in the last 5 years, so I'm good. And then something happens, and of course, they are underinsured. So you need to make sure in every area you are not overly concerned about a higher premium than you are on the amount of protection that you have. And that's in your homeowners, your auto, that's in all your coverage, your life, disability. Make sure that you are reevaluating and not delaying and waiting and ending up on the naughty list. Staying in the nice column, how to ensure a nice financial Christmas. The nice financial plan is reflect on your current assets and obligations. So take the time while we're ending the year, you're on your vacation and before you get ready to go back to the beginning of the year, and really reflect on your past year and your current assets and obligations, and just make sure that everything is covered. And be proactive, review annually, not just when a claim occurs. Unfortunately, a lot of people they wait till a claim comes and then they want to review. Well, it's too late to review. Once you need to file a claim, it's over. Then it's too late. You can still check it out, but you can't change anything. And then comprehensive coordinates life, disability, home, and liability coverage seamlessly. So definitely look at your comprehensive coverages and just stay astute of your protection. And you don't have, it's not a all during the year thing. It's a once a year, maybe twice a year event, but definitely a 12-month event for sure. And then what it'll do in conclusion is give you a peace of mind. And it's the best gift you can give yourself and your family for Christmas. Having that protection, being on the nice list, and being in a situation where you are protected, your assets are protected, and you don't get caught by surprise on any event that's going on. So I encourage everyone to definitely make sure your policy still fits. Stay on the nice list or get on the nice list if you're not on it already. And don't be on the naughty list because you need the time to cover yourself and review your policies, review your assets and all of your obligations, and take that. You need to take that time rather and review all your assets and your obligations, and just make sure you're covered and have a great holiday season and go into the new year protected and have your family protected. So your next step is to do this. Let's make a plan and schedule a review. Number one, action item number one, gather all your policies, declaration pages, your life, your home, your auto, and then list any major life changes since last Christmas, like a new job, a house, a baby, what have you, salary increase. And then action step three, contact us today for a comprehensive, personalized 30-minute review. And we can sit down with you, go over that information, make sure you've met all your obligations or meeting all of your obligations and protected, and give you the peace of mind that you can take care of your family and continue to keep everybody and everything protected and covered and have a great year going forward. So definitely take these steps, practice these action items, have a great end of the year. And I want to thank you guys for allowing me to share this with our community and share this information and let you know that we don't know what tomorrow holds, but we can ensure today's reality. So I want to thank you once again for letting me share this information. My time is up for this evening, and I thank you for yours. You guys have a great evening.
Wow, wow, great.